Sabine Stovall with the Wealth Planning Company. You are watching Sabine Has Something to Say. Did you all see my video from earlier in 2026 when I talked about how great corporate earnings looked, how resilient our economy is, and how optimistic I am for this year? Well, the market has pulled back a lot since then, but I still believe all of that to be true. What I failed to mention in the earlier video is just how uncomfortable this year is probably going to be. We're feeling it now, so let's talk about it. As I am recording this, the S&P 500 has pulled back over 7% year to date. The NASDAQ is down more than 10. Even bond returns are down so far this year. So what's going on? A few things. We are now in a conflict in the Middle East, and while it is unlikely that the conflict is going to escalate, it's still really disruptive. Iran produces a lot of oil. A strike in Iran impacts oil supply, which impacts oil prices, which impacts inflation, which impacts interest rates, which impacts economic growth. But we've been in wars before, a lot of them actually, each one devastating in its own way. But the economy has prevailed, and there's no reason to believe that this time will be different. Oh, and did I mention that this year is a midterm election year? Another source of uncertainty. It is very normal for markets to be shaking in the months leading up to midterm elections. Look at this chart. On average, the S&P 500 pulls back over 16% during a midterm election year. But it averages 36.5% in the year that follows. A lot of opportunity, but a lot of volatility. And honestly, I really don't think the economy cares who wins the election. It just wants to know the answer. Is Trump going to have support for his agenda after November or not? If Republicans come out strong, it'll be great for these companies. If Democrats come out strong, it'll be great for those companies. Either way, we fully intend to win. We just want to know what the rules of the game are. So uncertainty and volatility are high at the moment, but don't give up on the market. We have powered through downturns before, and we're going to do it again. Our economy is resilient, and I know it's tempting to try to time the market, but please try to resist that urge. If you put money in the market between January 1, 2016 and December 31, 2025, that's 10 years, your money would have more than tripled over those 10 years. But if you missed just 10 of the best days, you would have missed out on 48% of your growth. History tells us you're better off holding than trying to time the market. Our economy can be really uncomfortable sometimes, but that doesn't mean that it's not great. I still believe that 2026 will be a great year for investing. And if you want to hear more about how to position your portfolio for success amidst this volatility, don't hesitate to reach out. We at the Wealth Planning Company would love to help. Sabine Stovall with the Wealth Planning Company. Until next time.